The Reserve Bank has left rates on hold. Business reporter Edward Boyd is outside the RBA in Sydney. Ed, not just about the cash rate today, though. We're also expecting to see a major policy decision.
We are, Tom, and they have made a pretty big policy decision here. So, quantitative easing program that the bank's been going through since the start of the pandemic. By September, the RBA will have purchased $200 billion worth of government bonds. And today, in a statement, the bank says it's going to continue buying government bonds at a rate of $4 billion a week until at least mid-November. So the language here basically says the economy is doing much better than expected. Unemployment's at 5.1%. The housing market, property prices continue to rise. There's more people in work now than before the pandemic. So there's a lot of good signs for the economy. The Reserve Bank talks about that, and that's really their justification for why they're starting to wind back that government stimulus that has really been going since the start of the pandemic. So it does say that they will continue purchasing bonds past November, if need be, if the economy still needs more support. But so far, the economy is showing some pretty good signs for them, and they're going to slowly wind back that economic stimulus. But the bank also goes into detail about the cash rate. It's obviously on hold again at the record low of 0.1%. And the second last line of their statement today says they believe it's not going to be raised until 2024. So that's the same messaging that we've had from them for months now. There has been speculation that other central banks around the world will be raising interest rates earlier than 2024, but the Australian Reserve Bank of Australia is still keeping 2024 as their target, and they say that's when inflation is going to be between 2% and 3%, and when Australia's economy has signs of more wages growth then as well, and also the full employment figure, which about a year ago we thought full employment was around the 4.5% mark for the unemployment rate, but it seems to be the Reserve Bank is thinking that full employment figure will be lower than 4%. So it's going to take a while before we see the cash rate rise, but the bank is seeing good signs in the economy, and we have a tapering of the quantitative easing program. Tom?
So is that seen by the market so far, Ed, as basically the soft landing it was looking for on QE?
Yeah, look, there hasn't really been much of a market reaction today. Just in the last few minutes from this announcement, the stock market was down about 0.2%. It remains pretty steady, down at 0.2%. And the Australian dollar hasn't really moved. It was around the 75-cent mark before the decision, and it's still around that figure now, I think around 75.7 cents. So there hasn't been too much of a market reaction. So I think the market's taking some good news out of today's announcement. They're not too surprised by what the Reserve Bank's done. It's obviously classic Reserve Bank. It's a bit of a cautious approach. We're going to slowly wind back the QE, but make an assessment in November if we need to continue with quantitative easing. So I think the market's taking some positivity out of today. And of course, we're actually going to hear from the Reserve Bank Governor, Philip Lowe, a bit later. It'll be his third press conference since he started as Governor in 2016. He held two of them last year when the bank made some big policy decisions around implementing quantitative easing and reducing the cash rate to its current record low of 0.1%. So we'll hear from him a bit later today on why the bank's taking this new approach.
Indeed, so stick by Sky News, as you heard there, the RBA Governor Phil Lowe making that. It is a very rare speech. With the Q&A as well, when he talks, it matters. We'll bring you that live alongside some instant analysis, perhaps more translation from our business editor, Ross Greenwood. That's from 4 p.m. Australian Eastern Time, right here on Afternoon Agenda.